Yeah, hello and welcome to another update video about Ethereum. So it did the breakout, yeah, we came down and it's all going really well. After the last video, you remember with Ethereum here we talked about it had run into resistance and then we had some confluency in this area and yeah, this is the resistance box relevant for a fourth wave. It was in the end a fairly shallow fourth wave, but it did, yeah, as highlighted, get into the previous price region of the fourth wave and reacted here to the 23.6% fib level at 1544, which is for a wave 4 the ideal target, you could say. Yeah? And we had here two target zones, or a target zone, you could say, within the larger resistance area between 1538 and 1556, where we had confluence and the price nicely reacted to it and has come down. Yeah. What can I say? At the moment, it's all going according to plan. I think, as already highlighted in the last video, I think next week we're going to have some really interesting reward to risk trade setups here. Ethereum I already started to scale in at 1500 and I will buy a little lower as well. I think looking purely based on the target for this fifth wave, should ideally, and I have taken here the fibs, yeah. You take the let me just think what I do. Yeah, so we took the length of the third wave and then looking here at the beginning of the fifth, and then you get a target between 1473 and 1426. Now, another way of measuring targets, and it won't change a lot, but another way of measuring targets here as per, let me just double check that. Where did we measure? Yeah, so let me just measure them. So we've got two different ways of calculating targets. So the first one is we just take the length of the third wave and we go to the high of the fourth, and then we get sort of this area here, yeah, which we had on the chart, depending on how accurately I draw the fibs. There you go, between round about 1472 and 1424. We would expect this wave 5 to end based on this method of measuring. So that's why I've got the support area here within the larger. This is the larger support area in yellow, relevant for the wave 4 as it is. But a more accurate target can be calculated by just taking the subwaves. So we've got here the area between 1472 and 1424, plus minus a few dollars depending on your exchange. So I always recommend please draw them yourself. Now another way of calculating target is if we take the length of wave 1. And then we go to the high of the fourth wave and we look for the 1-to-1 ratio. And that's at 1442, so it is exactly here in the middle. Okay, so that's another target. By the way, I'm going to take out these lines. We don't need them anymore. They were relevant and we got rejected where we wanted it to get rejected. So at the moment, we're now looking for a target for the fifth wave. And the third way of measuring is we take the length of waves 1 and 3 and we go to the high of the fourth. Now, that naturally will give you different targets. So we need to check where do we have confluence, okay? So I'm going to highlight all of these with dotted lines, and what we need to watch then when we come down into the region is which of these do we actually react to? Which of these do we react to? So we already reacted to the $1,500 level, and then you could say if we get below 1,500, which I at the moment assume we do, because we ideally go below the third wave low in the fifth, yeah, then we should ideally see a target range between 1470 and 1414 with reaction points at 1471, 1464, 1442, 1424 and 1415. So that should provide a lot of support down there. So that's why I start to scale in. Small positions. I don't even set a stop loss at this stage because I took profits higher. So I'm not too worried about it. At the moment, I'm catching the falling knife. If I buy now, small quantities. But then when we have a confirmed reversal, I'm going to scale up a bit. And then we'll trade the fifth wave to the upside, okay? And that gives you some decent reward to risk because the target would be around 1800 plus. So yeah, not too bad from here, right? Depending on where you enter. And if we take a look at long position, and let's say, I, for example, entered here at 1500. If you say, okay, target 1800 plus, maybe even in the 1900 region. So if we say even if I was setting a stop loss, and I will probably do something if it really breaks below 1400, but I will set myself an alert. You've got a 3 a reward to risk ratio of at least 3. So that's decent. Yeah, that's decent. It's not amazing, but again, it could also go to 1900. So we've got some favorable reward to risk ratios from this area. And by the way, if it goes, let's do it. If it goes, yeah, to around about 1900, you talk about a reward to risk ratio of 4. So it's getting interesting. Okay. So, and then obviously I will, if we go lower, the reward to risk ratio will improve. So yeah, eventually you need to decide, you know, what do you do? Do you start to scale in, as I do it, for example, slowly? Yeah, very, very, you know, small positions, because you're quite far away from the relevant stop loss level. But, you know, or do you wait for a reversal? And obviously, just scaling in, trying to catch the falling knife is more risky, but that's why I keep positions small. That's how I manage risk, yeah. And also by going in only with spot at the moment. But then this will change as we move higher. So yeah, that's where we are. But yeah, that's where we are with Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.